Good evening and welcome to the Money Show. I'm Kavita Thapliyal, and into the world of personal finance, a topic that affects all of us. Let's dive deep, no matter how or where we are in our financial journey, whether you're just starting out with your first paycheck or planning for retirement. Understanding how money works is essential for achieving your financial goals, securing your future. So in this show, we'll break down complex financial concepts into simple, actionable advices. We'll talk about saving, investing, budgeting, and everything in between, all with the aim of helping you make smarter decisions with your money, from tips on growing your wealth to strategies for protecting your hard-earned cash. We've got you covered, but that's not all. Every week, we'll bring in experts, industry leaders, and real-life stories to help you navigate your financial life with confidence. So whether you are looking to build your emergency fund, plan for major life goals, or understand the latest investment trends, this is the show for you. So sit back, relax, and get ready to take charge of your finances, because it's time to talk money on the Money Show. All right, so today the show will be focused, and we'll be talking a lot about investment portfolios. And in fact, you have sent your financial portfolios and want us to do your live financial plannings. Just in case you're watching the show live, even now, you can send across your queries on our WhatsApp number, which is 865-797-4571. You can also email us your queries on themoneyshow@etnow.tv, the only show where we do your live financial planning. Yes, that's right. We get connected with you and help you connect with our experts and give you a strategy, get you a strategy for any of your financial goals or financial planning help that you need from our experts. And today, as an expert, we have Anil Rego, founder CEO of Right Horizons. Anil, hi, good evening, welcome to the show, and let's dive in. The first question is from our viewer, Prashant Kumar. So he's got Tata Large and Midcap Fund, SBI Healthcare Opportunities, Nippon India Large and Mid Cap, and he's got ABSL Large Cap, SBI Mid Cap, and Quant Small Cap. Total SIP amount is 15,000 per month. Okay, that's the only information I have as far as investment is concerned. I am not sure about how long he wants to stay invested, or what's the amount of corpus that he's looking for. But okay, a lot of repetition and sector-specific fund he has in his portfolio. I don't know how old of an investor he is, so we'll have to make a few assumptions, and because we don't have clarity on a lot of part, his portfolio is also not well diversified. I think he would need help from you on those lines also. What would you recommend?
Yes, so of course it would have been useful if he could have given further information for us to understand him better and give something which is more customized. So, if you just have data on funds, then we need to give it maybe on, how the funds are performing. So, and possibly, what segments he has, right? So I think, yes, firstly, he has the Healthcare Opportunities Fund, which is a sectoral fund, and that is something you need to keep in mind is when you look at sector funds, then you need to be able to, also enter and exit them at the right time. So for most of us, we need to look at it only if we are able to time the entry and exit, right? But at this point of time, I think healthcare is also looking good and possibly will do well in the long term. So I'm continuing to suggest a hold there on the SBI, Healthcare Opportunities Fund. However, on Tata Large and Mid Cap, I think we can change it and look at, let's say, an IPRO Large and Mid Cap within the same category to find a fund which is sort of better performing. You can continue maybe with whatever is the investments which are already there, but move over to sort of a better performing fund for the SIPs. Similarly, SBI mid cap, maybe, one can look at HDFC mid cap, right? So these are the two changes that from a performance base. Yes, one thing that he needs to look at, like I mentioned earlier, the healthcare side. And if he can time the exit, it's good. Otherwise, there also maybe just move to a diversified, say, a flexi cap.
Move to ICICI Pru Large and Mid Cap, suggesting shifting from SBI Mid Cap to HDFC Mid Cap. Okay, so he really needs a lot of balancing in his portfolio. Small caps are fine. quant small cap? Do you really want him to go with that small cap fund, or he can just shift into some other small cap category?
Yeah, so I think one needs to keep in mind again, quant has also been a high risk fund, and there have been issues around liquidity also in some of the counters. Okay, so that is also something to be on the watch list, and the only thing is if you have to redo almost all the funds is where one was being a little conservative on. Okay, so quant small cap possibly one can move it to a Nippon small cap is the other one to look at. I would say just maybe watch for some time and then an opportune time also make the switch there as well.
I have one question, because see, when we talk about the universe of small cap, Anil, the universe is very vast. So when we talk about moving from one small cap to the other, what factors are you keeping in mind over here? I know quant small cap is underperforming since a very long time. It's been more than a year now almost. Now, having said that, what is the different strategy in Nippon India small cap and quant small cap?
Yeah, so quant is typically using a quant methodology and mechanism, and we've sometimes found that when you look at a quant mechanism, you don't have maybe the quality filters, the fundamental filters, etc. Of how a company is doing. So from that standpoint, Nippon is a little bit more, grounds up, fundamental led, sort of research oriented, and looking at long term investing. Yes, because of the size of the fund, there's an issue there, and so it has to diversify across quite a lot of companies. But I still think that from a quality filter, keeping in mind as markets go up, it gets more and more risky, and quality is something that one sort of focuses on. From that standpoint, is where one suggested maybe a Nippon small cap.
All right, let's move on. I have a live viewer, Mr. Prakash, connected on the phone line. Hi, good evening. How are you doing, sir? You're calling from?
I'm calling from Hyderabad. My age is 52 years.
Okay, sir.
I want to build my portfolio for my retirement. Another 7 to 8 years at the age of 60.
Okay.
I'm a private employee.
Okay.
I don't have any mutual funds right now.
Okay.
Except PF and PPF, I do not have any other savings, and I want to have this retirement as my goal.
Okay. You said your age is 52?
Yes, madam.
Because as per the mail, we have the age is 45. Okay, so that leaves us with 7 years.
No, madam, it is my wife's age. My age is 52.
Okay, got it. So you have never invested in equity. This is the first time you're looking at equity as an asset class. Is that right?
Yes.
You've been a conservative investor all your life, because you told me that you have PF and PPF. You must be also having fixed deposit then?
Yes, madam.
Okay. So, are you aware of the risk involved with the equity asset class? Like any other investment instrument, be it PF or fixed deposit, every investment instrument has certain amount of risk involved in it. Are you aware of the equity risk over here?
Yes, madam.
Okay.
Yes.
So you're going to invest SIP of 1 lakh rupees. You want to invest it for 8 more years till the age of 60. My question to you is, are you sorted as far as pension is concerned, or you want this portfolio to provide you that money?
It is for this one, madam, building a corpus.
Just building a corpus. So you can go more than 8 years also then?
For 1 or 2 years, I can stretch it.
Can we make it 10 years?
Yes, madam.
Okay. All right. How much risk are you comfortable with?
Risk, of course, risk is there, but conservative portfolio I want to build, madam.
Okay. So let's look at giving you a balanced portfolio where there is not much of a risk involved. But the good thing is that because the time horizon is 10 years, your risk also gets mitigated. Okay. Anil will explain you the concept over here. So Anil, never entered equity, first time with the goal of retirement, just 8 years. We convinced him to extend it for more 2 years and make it 10 years now. But one good thing is that he doesn't need pension from this portfolio. So how can he go about it?
So I think there's a number of data points additional that he gave, which is good. So we can give him a better recommendation. Because earlier, when his spouse age is 45, when we looked at it, then we even suggested, say, small cap fund as one of the options for him. Okay, but I think keeping this in mind, okay, I would suggest at this point maybe one of the first funds for him to look at is the HDFC Balanced Advantage Fund. Basically, these are dynamic asset allocation funds. For a first-time investor, I think that's a great fund to use. What are these balanced advantage funds or dynamic asset allocation funds? Basically, they are funds which have a combination of debt and equity, and the ratio is dynamic. Okay, so as markets go up, it goes more into debt. As markets get more riskier, it goes to debt. And when markets fall, they look at valuation parameters, and based on that, as markets fall, it'll basically go into equity, right? So automatically, it is balancing risk very well. Okay, and if you look at on a 3-year basis, it's very rarely you've seen sort of a negative, and so this is something it is something that he can also use for retirement if he wants to do a systematic withdrawal as well. But on top of that, because he has some tenure with him, and this is not something that he's possibly looking to get monthly income immediately, okay, but more to build a corpus, then he can also look at, say, a large cap fund like an
Okay.
ICICI Pru large cap, okay, and also do possibly a HDFC, or maybe even before that, Parag Parekh Flexi Cap. Right?
Okay,
I would
right.
stop at these 3 funds for him at this point of time.
So let me just repeat it. ICICI Pru Large Cap, HDFC Mid Cap, Parag Parekh Flexi Cap. Is that right?
No, I said also HDFC Balance Advantage.
HDFC Balance Fund and Nippon India Small Cap. Are you still recommending, or you just?
I would not suggest at this point of time.
All right. So, Mr. Prakash, ICICI Pru Large Cap 20,000, HDFC Mid Cap 20,000, Parag Parekh Flexi Cap 20,000, and HDFC BAF over year 20,000 is what is recommended. Rest of the amount?
No, I think since we're dropping one fund, he can make it divide by 4 to 25,000.
Yeah, exactly. Yeah. Okay. And the rest 20,000 can be divided in all of these funds equally. All right. Thank you so much. And we hope your query is sorted, Mr. Prakash. And Anil, let's stop for a quick break. And post that, let's continue the query session. And for the viewers, I'm going to also flash our WhatsApp number and email ID once again so that you can send across your queries to us.